So we see a lot of numbers coming in, a lot of people joining us. That's a great thing for us. And thank you very much again, everyone, for joining this Thursday. First of all, very good afternoon to everyone. So my name is Abhimanyu Arora. Along with me is Mr. Sameer Bhandari, who is our co-founder and CFO. So this time we are actually trying to start and do a little different way how we need to do our webinar. As we all know that we have touched based a lot about SM REITs. So this presentation, what we're going to do is we'll just talk about maybe 5 to 7, maybe maximum 10 minutes about the presentation. And then we'll just ask questions, or rather, you should ask questions to us. And if you have any questions, please park in your questions right away on the Q&A place. And it's all about ask us anything about SM REITs. So let me just start off. Uh, First of all, let's give me a little bit background and something introduction to our leadership team. Mr. Shiv Parekh is founder and CEO of HBITS, undergrad from Harvard, from Stanford University, overall experience working with Citibank and Stanford Management. He's Forbes 30 under 30, Business World Disrupt 30 under 30. While we incorporated this organization in 2018 and started in 2019, Mr. Sameer Bhandari joined us around 3 years back to accelerate growth and sales in HBITS. Just to give you a little bit background about him, he's an IM 89 batch, chartered accountant batch 1987. From 89 to 96, he was with Mumbai for working for Bank of America. From 96 to 99, he was with UBS Singapore, of course, as a managing director. From September 99 to 2008 June, he was with JP Morgan Bank Singapore. From June 2008 to 2021, he was with Lehman, which was further picked up by Nomura Securities. He used to handle fixed income and equity market globally, and as well part of the global exec. Well, just to quickly take up the round, okay, a bit about myself. Over 25 years experience. I worked with banks like HDFC, HSBC, DBS Singapore, and Kotak purely into wealth and treasury. Graduate from Mumbai University, and I've done my few courses from IIM Calcutta. And of course, it's been close to 6 years working with HBITS now. A bit about SM REITs to lay out for a quick introduction for new people joining in. What is an SM REIT and how is it different from a traditional REITs? SM REIT, for people here, just to let you know, is a small and medium real estate investment trust. Well, yes, it is a SEBI approved investment vehicle. We focus only and only on premium leased commercial assets, professionally managed by HBITS. It's an asset specific investment. No related party transactions, which of course we'll just touch base deeply in further interactions. Why are SM REITs being positioned as a fixed income opportunity? Well, as we look into this particular product, we touch base and rentals returns from grade A tenants. So we are only dealing into grade A properties with a grade A tenants. We generally look at long lease between 3 to 9 years, of course, long lease or lock-in period between 3 to 9 years, in which not only we look at the steady cash flow from rentals, but of course, we like to deliver you capital appreciation as well. And of course, it has got a lower correlation with equity markets because it's not got any volatility. It's backed by a fixed rental agreement in the very start. What makes SM REITs an attractive investment? First of all, it's been SEBI regulated structure. Rental income is visibility because when you sign up for this particular investment, you will be aware in advance what kind of a cash flows you can expect for the next 3, 5, 9, or whatever the product portfolio would look like. Yes, the entry point is as low as 10 lakhs in comparison to if you look at investing into a real estate or an AIF of a real estate, which starts with at least like a 1, 2, or 3 crores. Uh, Here we start with a unit of around 10 lakhs and multiple of 10 lakhs. It's a professionally asset managed and passive and stress-free investment. Further to talk about why do SM REITs fit in the fixed income mix? A, better yields than FDs. Currently, if you look at FDs, our returns, which we get around 6.57, 7.5%. Over here, we're looking at to target around 8.5 tax-free returns. How do we reach that? We can surely go ahead and ask you and let you know about that particular thing. In currently, when we look at traditional real estate and fixed income, this not only is a bridge, but is actually a blend between both the worlds of traditional real estate as well as fixed income. More stable than equities, because in equities you can have see different cycles wherein markets can go up or down. Over here, you can see quarterly returns coming into your account as a rental, and capital appreciation, of course, in the future when you exit the particular property. Yes, it is backed by real estate. When we talk about backed by real estate, the real estate property will be part of the prospectus, and you'll be aware that which property slash which asset you're investing in advance. A Prior to this, which I've mentioned that this is a SEBI regulated asset. So, what is actually a role of SEBI in SM REITs? Well, SEBI has formalized SM REITs as a regulated product. It brings transparency, disclose all the norms and governance over the particular product. Of course, as per the key role of SEBI, it ensures investor protection and enables listing and trading of units. As this will be listed either on a BSC or ESC, you can surely look forward to have this particular thing, a transaction on the BSC or NSE, and you will come to England where this product is listed. Why it matters? Retail investors get access to a trusted institutional grade A commercial real estate with the A grade tenant as an investment portfolio. Well, basic features, as we already talked about SEBI regulated, but what are the quarterly returns? These quarterly returns are backed by SEBI SM REITs offer. We're talking between, so though the rental yields will be looking like 8, maybe between 8 to 9%, but the IRRs, which includes capital appreciation, so it will be looking at like 13 to 17% IRR, of which a large part is the rental income. Capital appreciation over time, and of course, at the time of the exit. Quarterly cash flows, unlike bonds or debt mutual funds, ideal for long-term income-focused portfolios. If I look at from retirement income, a person looking at wealth creation, a person having an objective of looking at a 5-year horizon or a 3-year horizon, this is the product which you can look at. And there is an indicative price which we have parked over here, mentioned a use case. A 10 lakh rupee investment typically generates 18,000 to 22,000 quarterly. This is an indicative number. And of course, when you invest, you will be aware that what number will be looked into your account every quarter. Well, last part, if I have to talk about balance, diversify, earn SM REITs in action. Ideal for investors who want steady and rental-backed income, capital protection and long-term potential, stability, seeking investors wanting to diversify beyond equities, low volatility but real estate exposure regulated by SEBI. As we all know that in equity markets, there volatility, hence this has a very low volatility, indeed as good as no volatility, because it is all determined. See, if I talk about a pre-lease commercial property, it is basically you're aware in advance as per the rental agreement what your quarterly returns could be. The only low volatility part could be that what kind of a property appreciation that property can give you in the future. Well, in the use case examples, if I have to talk about professionals build long-term corpus, yes. HNI is an emerging influence looking for alternate income sources. This is people can look for this particular product. Investors wanting asset-backed SEBI regulated, so this is the product for you. Those planning for retirement income or passive wealth creation. Indeed, while I was going back to my career, if I talk about, there were around 4 to 5 objectives, and I thought of all of them, which 2 of them are covered, which is retirement income, wealth creation, children's education, legacy planning. All of these can be covered in this particular product. Quote, think of SM REITs as owning a piece of commercial building and getting your share of the rent. Well, as I already mentioned, that we'll be just covering just few slides, a quick overview on the particular part, but we want all the questions coming from your end now, and we'll be looking forward to answer all of them. Herein, I call in Mr. Samir Bhandari, our co-founder and CFO, who is here. Thank you, Samir, for joining. And I guess right now you are in US, and looks like it's around 3:30 over there. And again, thank you to taking out this time. But you're looking stunning in the leather jacket. So I'm hoping that the questions are as stunning as you look.
No, thank you, Abhimanyu, and good afternoon, everyone. As Abhimanyu mentioned earlier, we wanted to keep this presentation short and answer all your questions. So why don't we dive in immediately and start answering the questions? Our first question, they say, hi, as I understand, you're returning 8% out of the 100% in the first year, split in 4 quarters as in return of capital entirely. Then my capital remaining with you is 92 for second year. How are you still returning 8 on the second year and so on, and every consecutive year at the rate of 8% till the exit? Is this return of capital 100% except from taxation in my hand? That's a great question. You are absolutely right. Your 8% remains fixed because we have long-term rental contracts with our tenants. So you will continue to receive 8% of the 100 you have invested in. Yes, your capital will continue to reduce, but it's only for taxation purposes. So if after 5 years, your capital has come down from 100 to 60, if you sell your units, or if we exit the property at say 125, you will be paying long-term capital gain on the difference between 125 and 100. So to answer your question again, it's really for taxation in your hand. But that's a great question. Thank you. The next question, how much capital growth do you expect? Will it be after selling the property or in other form? And another question is, do you expect the growth even after the tariff issue with the US? So let me take the first question. Typically, rentals, Satish, go up by 5% every year. And we try to identify properties which are under rented. So if and when the tenant leaves, or if we have to renew the contracts, we can actually jack up the rental income. So on a conservative estimate basis, we expect anything between 5 and 6% per annum appreciation. Given the demand in commercial real estate, would not be surprised if it's closer to 7% per annum. In fact, just to give you an example, we recently exited a property after 3.5 years, and we gave an IRR of close to 14.7% for our investors. On your second question around the tariff, I actually don't think this will affect expected growth. India is a very attractive market for GCCs, a lot of multinationals which are coming in, and that I think continues to grow. The demand is a lot, the supply is definitely limited. So I actually do not expect any issues, Satish. The next question, if I don't want exit, do I have to tag along when you decide to exit? Yes. So as an asset manager, we keep the interest of all our investors in mind. Typical exit strategies are never before 4 or 5 years. And if you want to exit before that, of course, you can sell your units on the exchange, since these are going to be listed on either the NSE or BSE or both. But yes, if the asset manager decides to exit it and we want to sell the SPV, then yes, you will have to tag along with other investors.
Right. So another question which we have from Mr. Shabir. Hello, good day to you. I see on your quote below, owning a piece of commercial building, is it mandatory commercial? Any projects for residential units or industrial warehousing under HBITS? Thanks.
Yes, so we only look at commercial properties, and when I talk about commercial, it's talk about offices. It could be warehouses. It could be hospitals. We do not look industrial warehousing. Yes, is definitely included, but we do not look at residential because we don't expect residential to give the same kind of return of what we get in commercial, and hence we our investment is really going to stick to commercial, industrial warehousing, hospitals, which can give you returns of 8 to 9% on a rental basis and IRRs of anything between 13 and 17%.
Mr. Kishore happens to have what will be the minimum investment?
The minimum investment in each unit is 10 lakhs and multiples of it.
Mr. Srinidhi happened to ask for the existing investors how the migration happens from fractional commercial real estate to SM REITs. Do we get monthly or quarterly rent after the migration? What happens to CCDs and shares?
So once we decide to migrate, obviously there are certain conditions we have to fulfill. Then your all your units become SM REITs. Uh, Typically, initially we are going to give quarterly rent after the migration, mainly because it's going to be a new process. So we want to make sure that the process is followed. Over time, we may change the quarterly rent back to monthly. What happens to the CCDs and shares? They will be converted into effectively shares, which will be listed on the exchange.
Mr. Osman happens to ask what is the latest offering from HBITS? Anything from SM REITs?
Usman, a lot of investors have been asking, and as you know, we are very careful about what investment we make for our investors. So we are in the process. We are in fact looking at properties in Bangalore, Delhi, Pune, and Mumbai. And please give us some time. We are in the process of signing up some term sheets. So as and when the term sheets are signed, as and when we file the document with SEBI, you will definitely know about it. We hope that in the next 2 to 3 months, we can come up with multiple properties.
Ashish asks process of investing in SM REITs.
I guess, Ashish, since this is going to be an IPO, so the process of investing in SM REITs is exactly going to be like an IPO. We will file the DHRP with SEBI. We will be marketing the IPO to all our investors. And then the IPO typically will open for 4 days. Once the IPO is open, you will apply for units of the IPO either through a broker or directly. So it's exactly going to be like an IPO.
Aditya happens to ask, is it 6 to 8% IRR? Is all inclusive of includes capital appreciation as well?
So when we talk about IRR, Aditya, IRR includes two components. One is the rental income. The rental income typically will be 8 to 9%. In addition to that, there will be what we call capital appreciation. The capital appreciation will be 6 to 8%. So if you add the two, 8 plus 6 or 9 plus 7, that is what the overall IRR will be. So when we talk about IRR, we're talking about rental income plus capital appreciation.
Nikhil De Cruz happens to ask, how are the quarterly rents paid? Is it like we receive dividend from stocks?
Effectively, yes, the rentals will be, this is all going to be in demat. So the rentals will go straight into your account.
Srinidhi happens to ask, will you maintain the promised entry yield and IRRS after the migration?
I guess, Srinidhi, you must be talking about some of the existing assets since you're talking about migration. So wherever the rental contracts are there, those contracts will continue even if we have migrated to SM REITs. Obviously, for the migration, there are certain costs involved. and the costs really are listing, merchant banker costs. So those costs obviously reduce your yield. But what helps then in the migration is because it becomes a tax-free instrument, especially around the rental. Presently, in the erstwhile fractional space, you have to pay taxes based on your tax slab. In SM REITs, it becomes tax-free income. So that's the benefit to you as an investor.
Mr. Sanjeev Kumar asks, do investors hold part of the land? What will happen after 30 to 50 years?
I guess so. Firstly, we will be investing in a property which will obviously be built on some piece of land which is then leased out. So you will be owning the property where we have invested in, because the land on the land there could be other units which are held by other investors. So you will be holding units of a particular property which will then be bought by the SPV.
Question from Afreen. Can NRIs save on double taxation on long-term gain in this?
Freen, I guess, firstly, you'll have to obviously consult your chartered accountant. But from what I know, if you have a double taxation agreement, if you have paid taxes in India, then you will be getting offset in your own country.
Another question is, what is the correlation of this 8% return and changing RBI rates?
It is definitely correlated, but the correlation and the timing is quite different from fixed deposit rates. So if RBI were to cut, say, by 50 basis points, you will see an immediate impact on fixed deposit rates. So 50 basis points will go down immediately. Whereas the rental return or the cap rate, as we call it, there is a bit of lag when it actually goes down. Obviously, it will go down. So your 8% may not remain 8%. Over time, it may come down to 7.75, 7.5. But there's a bit of lag, which is actually in the investors' favor. But yes, is there a correlation of rates actually coming down? Yes. But what happens in that case then if the cap rates come down, then your capital appreciation goes up because all properties are sold on cap rates. So that is a massive benefit then to investors or who are holding existing properties and as rates go down.
Question from K. Mathut P. Is it a SEBI mandate that all SM REITs shall invest only in grade A properties? Who certifies that a property is what grade?
So SEBI mandate is not to invest only in grade A properties, but we as investment managers feel that the capital appreciation and the tenancy, the best you get in grade A properties. So but SEBI does not insist that you have to invest, but we definitely invest only in grade A property. Who certifies that a property is that what grade? We typically talk to a lot of the ITCs, uh, and we ourselves judge what kind of property is it, and it basically takes into account the construction quality. Are there any ESG benefits, green benefits? Is it in a tech park? So we look at all these things to determine whether it's a grade A property or not. Also, grade A property typically, most of the good tenants like Microsoft, Toyota will actually go for grade A properties. They will not go for grade B or grade C properties.
Question from Pawan P. What is the current composition of portfolio, office, retail, industrial, etc.?
So presently, Pawan, our portfolio is mainly office. So we have existing 15 properties and they are all offices. They are across Bangalore, Mumbai, and Pune. And the tenants are tenants like ICICI Bank, Microsoft, Toyota.
One additional question. From where and how can we purchase and exit?
I guess SM REITs can be, you can subscribe to the IPO. So that's how you purchase. So as and when we launch an IPO, you subscribe to the IPO. You can also buy it in the secondary market after the IPO has got listed. Exit, you can sell it like any other share which you hold in your demat account. So you can go into the market and sell it anytime. So there is no restriction on of sale of your units on the exchange.
Question from Rahul K. What is the post-tax return if I fall in 30% tax bracket?
So Rahul, as I mentioned, the rental income is effectively tax-free. So the 8% which you will get will be tax-free. I'm going to take a scenario where we are selling it in 5 years' time. And I'll take a scenario that your appreciation is, say, roughly 5% per annum compounded. So after 5 years, you would have received 40 rupees, right? 8 into 5 into your bank account. Now, I'm not taking it, though 8% quarterly is more like 8.3 or 8.4% annualized. But for the time, I'm ignoring that 0.3%. But let's say I'm taking roughly 8%. Say after 5 years, your capital becomes 60 because 40 has been redeemed. And assuming you sell it at 130. So on the 70 difference, you will be paying a capital gain of 12.5%. So overall, your return, assuming you get 5% capital appreciation, assuming, and 8% of rental income, your post-tax return will be more closer to 11 or 11.5%.
Question from Pawan P. Who manages the REIT?
So HPITS is the investment manager regulated by SEBI who will manage the REIT.
Anuj, question from Aruj A. Please elaborate on how IRR of 13 to 17% when rental yields currently is around 7 to 8%. Also, what is the tenure of the REIT?
Yeah, that's a great question, Aruj. So we obviously expect capital appreciation of anything between say 5 and 7%. Obviously, these are not guaranteed. The rental income is effectively, you know exactly what your rental income is because of the lease agreements. But capital appreciation, why do we expect it? For a few reasons. One is you have rental escalation, typically 5% every year or 15% every 3 years. When you sell a property, you sell it on cap rates. So assuming all things remaining the same, your rental would have gone up from 8%, and if it's appreciated 5% every year, at the end of the fifth year, it would be 10.5, 11%. But you will be selling it at 8%. So you will get that capital appreciation of 20 to 25% at the end of 5 years. And when you add that to your rental, your overall IRR becomes 13 to 17%. I haven't even taken into account cap compression. When rates come down, as I mentioned earlier, you actually also get cap compression, which also helps the commercial property. As regards the tenure of the REIT, there is really no tenure of the REIT. This is effectively perpetual capital. If we decide not to sell the SPV, it can be traded on the exchange. Why we would like to sell sometimes is as properties become older, or if we do think that we can get the return and the market is strong, that's when we try to exit. But typically the exit is after 4 to 5 years.
Question from Rahul K. When is your first SM REIT getting listed?
Rahul, I can't promise you the exact time, but we are working very hard to list it. We hope in November, December, we should be able to give you a listing, and this will be listed either on the NSE or the BSE.
Question from K. Mathut P. What are your management fees and is it capped by SEBI?
The management fees, Muthu, will be between 0.5% and 1% per annum. So far, I don't think it's really capped by SEBI. This asset class, Muthu, requires a lot of work from investment managers. Given the fact that this property, the due diligence which is to be done, the whole process of identifying the property, making sure that the micro markets are good. So I'm not sure whether the management fees are going to be capped by SEBI, but so far we've not heard anything from them.
Question, are there any assets listed currently?
We have not listed any assets currently. We will be, as I mentioned, launching our first IPO in hopefully the next 3 to 4 months. There are some two properties listed by PropShare, which is a Bangalore-based company, which is listed on the exchange.
Question by Sudha. I joined only today, that too just now. I don't know anything about REITs. My doubt is the value will be fluctuating like other shares or it will be constant.
Uh, I would say, Sudha, this is going to be very different from equity markets. Obviously, equity shares are much more volatile. REITs or SM REITs in our case are going to be much more consistent. Uh, I don't know exactly how much the volatility is going to be, but my guess is it should not be more than 2 to 3% on a number of days. It's going to be much less than equity.
Question, are you planning to acquire warehouse in tier 2 locations?
So far, we haven't. We are looking at tier 1 locations at this time. We want to launch some of our first deals in tier 1 locations. And of course, the tier 2 locations, as we know, are growing very fast. So we will definitely be starting to look at them.
Question from Rahul K. Are you looking at data centers and is it easy to find such assets?
Rahul, data centers, yeah, we'd love to do data centers because there's a lot of demand for them. But as you know, the capital outlay on data centers is very large. So some of the data centers, each data centers are, 100, $200 million, 5,000 crores, 4,000 crores. The SM REIT model for the time being restricts us to 500 crores for each asset. So we will be looking at data centers, but they'll be much smaller. And hence it's not easy to find such assets as of now, but we are definitely open to it.
Question from Jayan. Why is HBITS not yet having SM REITs traded in the DMAT and there's only one player prop share in it? And in the case of HBITS coming under SM REITs, how will it affect the existing investors?
So PropShare, Jayan got its license from SEBI almost 8 9 months ahead of HBITS. We got our license from SEBI April 1, and we've been setting all the systems in place. But we, as I said, we are very confident that we should be launching our first SM REITs very soon. PropShare, as you know, has launched too. It will even we under SM REITs, it will not affect the existing customers. Over time, we are also looking to migrate some of our existing assets over time, but definitely it will not affect the existing customers at all.
A question from Sridhar. When is the first SM REITs from HBITS and how many projects are lined up?
So Sridhar, as I mentioned, we are looking to do something in hopefully in the next 3 months or so, launch our first SM REIT. We presently have projects of more than close to total of 2,000 crores, which are lined up, which we want to start coming up with IPO soon.
Question from Suresh. I'd like to understand and how we safeguard in the event of tenant bankruptcy during the lease term. specifically when contractual or structural protections are in place to mitigate risk and preserve investor returns in such scenarios. Additionally, a hypothetical situation where HB itself faces insolvency or bankruptcy, could you elaborate on your how fraction investors in SMBs are protected? What example are the underlying assets ring fenced, and what mechanism ensure continuity of income or asset management in such cases?
No, that's a great question, Suresh. Let me talk about tenant bankruptcy. As soon as the tenant goes bankrupt, obviously we'll know immediately. We typically have a 6-month deposit from the tenant. So as soon as the rental stops, we will start firstly offsetting the deposit from the rental, and we will tell the tenant to vacate the property since they are not paying the rental. There'll be legal notices immediately, so they have to then leave the premises. So that will obviously protect you as investors. And these are clear contractual obligations, right? If you don't pay the rental on time, you have to pay so much interest. If rental is not paid for a certain time, you have to vacate the property. So these are all in place, and the 6-month deposit is always there. If in a hypothetical situation HBIT faces insolvency, all the SPVs or the companies which hold the asset or the property are bankruptcy remote SPVs. HBIT is the investment manager. So you could always, as investors, find another investment manager to manage your properties. Whereas the holding of the property, which is the most important thing, is bankruptcy remote. It's in a bankruptcy remote vehicle, which protects all our investors. Changing, investment managers you can change easily. You can get someone else to manage it in this case.
Question from Sandeep. You have mentioned that rental income is paid as capital return. Will this mean there won't be any tax deduction at source when disbursement happens?
Absolutely, you're absolutely right. So tax deduction at source only happens, I guess, when you have to pay taxes at your rate or marginal rate. In this case, if it's return of capital, then TDS will not be there.
Question from Aditya. What is the fundamental difference between fractional ownership and SM REITs?
So Aditya, as you know, fractional ownership was the erstwhile investment theme where you could invest in a commercial property, uh, uh, but was not regulated by any regulator. So the fundamental difference really is SM REITs and the erstwhile fractional ownership is that firstly it's regulated by SEBI. Secondly, in the earlier fractional ownership, typically the ticket size would be 25 to 30 lakhs. In SM REITs, the ticket size is 10 lakhs. Thirdly, in fractional ownership, it was not listed on the exchange. In SM REITs, it is listed on either the NSE or the BSE. Fourthly, the tax structure is very different. Earlier on, you would pay on a marginal tax rate in fractional ownership. In SM REITs, it's shown as return of capital as I discussed, and you would pay capital gains on long-term capital gains after 1 year on the units you sold. Uh, and finally, given that regulation, wealth managers will distribute SM REITs like any listed product. Whereas earlier fractional ownership, a lot of the large wealth guys did not want to distribute. Also as an investor, you have more rights given that it's a regulated instrument, and plus getting a loan on your units, which are going to be listed on the exchange, is much easier than what used to be the case in earlier fractional ownership.
Question. What percentage of stake of HBITs is in any property?
So in as per SEBI regulations, we would have to have 5% sponsor capital in every capital. At least that's going to be the minimum.
Question from Kishore. What will be promoter stake minimum and maximum as per SEBI?
Uh, what will be the promoter stake minimum and maximum? So as I said, minimum will be 5% and maximum will be 25%.
Question from Madina. Any properties regarding Edgebit starting from 10 lakhs?
Yeah, so that's what Medina, we are coming up with our first property, uh, hopefully very soon in the next 3 months, and you will be able to invest in these properties with each unit of 10 lakhs.
Question from Rahul. Although there are so many institutions got some SM REIT license, we see that the listing is slow and is it difficult to find assets?
So Rahul, this is not an easy business, right? So in the fractional space, PropShare was there and we were there. A lot of the other players who are getting the REIT license have never probably done fractional investment earlier, but they've got the licenses from SEBI. Uh, and obviously, the first property, and why is it taking time for us? The first property to list, because it's a new process and the size is different. Earlier, we would do properties of 50 crores. Today, we are looking at deal sizes of 250 to 500 crores. Though the minimum ticket size is 50 crores, but we'll do at least a 250 or 300 crore property. So it's very, very different from the earlier fractional space. Uh, my guess is the first deal is taking time, but as the first deal gets done, it's actually going to accelerate. And we expect that in 1 year, we will be actually able to do 2,000 crores or at least 1,500 crores of assets in SM REITs, whereas earlier on, we could do only 200 or 250 crores a year.
Question. What is the legal structure of the unit? Is it a share or debenture of loan in your books? Since you're returning it every year to me as a return of capital, do I have to show the unit as loan in my accounts?
So effectively, it's a trust structure, and under the trust structure, there is a scheme. The scheme will have CCDs and equity, and we will be basically redeeming the CCD. So in your books, also, since we are going to show it as a return of capital, you should also show it as a reduction in the CCDs in your books, and this will be clearly explained to you once we have filed with SEBI the prospectus.
Question from Pawan. If I invest 10 lakhs now, how much will I make at the end of 5 years? Example, after deducting tax.
So here again, Pawan, as I mentioned, the rental income will be tax free. So there will not be any deducting of tax. So you can just you'll get 8% per annum quarterly, and if you can just add it, you'll get that after 5 years. Obviously, the 8% you will get quarterly, so you can invest that 8% anywhere you want to.
Question from Satish. Can I invest through my existing demat account?
Yes, you can, Satish. What you could do is give the details of your demat account uh, to either us, or when you are investing through a broker, the demat account will be there. So yes, you can. To answer your question, yes, you can.
A question from Mr. Prashant. Since the time of investing, right now, as a price, has it increased? I've invested in the properties which are in Pune and Bangalore.
Since the time of investing was arrived, yes, overall, Prashant, you are asking whether the capital is appreciated. Yes, the demand for a lot of these properties has been very strong. As I said, we've recently exited a property which we had bought 3.5 years back, where we exited at 14.5 or 14.7%. So a lot of the properties, definitely the values have gone up.
Questions from Praveen. Rent is tax free?
Yes.
Question from Sumit. What is a fair comparison with IRR over 5 years with other fixed income like FD or government corporate bond?
I guess if you talk about fixed deposits, you get uh, I think between 6.5% and 7%. Uh, uh, if you were to invest in a 5-year deposit, a 1-year deposit is around 6%. So I would say let's take on an average between 6.5% for fixed deposit. In bonds, you could probably get, depending on what the credit rating of the bond is, you could get between 7.5% and 9%. Uh, Government bonds are around 7%, 7 and a quarter. In this case, we expect IRRs of 13 to 15% or 13 to 16% is what our expectation is for SM REITs.
Question, which is a followed question earlier by Praveen. Rent is tax-free in the hands of investor? Yes, so that was answered. Question from Ankit. Can the share price also decrease the property share? REIT when listed was by property share was 10 lakhs and now it is 9,90,000. We are in lost in that case.
Ankit, yes, the answer C is going to be listed on the exchange. So the prices obviously can come down and go up. My explanation is that you should look at it as a slightly longer term play because it has real estate. Real estate appreciates over time. So do not look at it as a day to day. It doesn't matter, especially if you're not looking to sell the units. But to answer your question, yes, it will fluctuate since it's anyway listed on the exchange. Obviously, the fluctuation and the volatility is going to be much, much less than equities. You know, equities can go up 15%, 20%. In this case, that's not going to be the case.
Just in addition to this, for Mr. Ankit, uh, we have to submit a valuation report yearly to SEBI. So after 1 year, when PropShare or us submitted to SEBI, you will see a increase in the NAV value. The current dip is basically of the market economics. So you should look at it as a long term, which Mr. Sameer Bhandari happens to say. So question from Sweta. So how many years has HBIS been in SM REITs business?
So, Shweta, we were in the fractional business. We listed our first asset in 2019, and we've done close to 500 crores in the fractional space. Now that we are regulated, we plan to accelerate that, and we expect to do another 8 to 9,000 crores to reach 10,000 crores overall assets under management in 4 to 5 years.
A question from Madina. If we have to sell the property in between, only then what is the process?
So Medina, these units are going to be listed on the exchange. So you can go onto the exchange and sell your units any time at the price which is listed on the exchange.
Question from Ashish. Is there any SM REIT in pipeline? If yes, what is the minimum capital required? If not, then expected timeline. So as Sameer happened to mention, the minimum investment is 10 lakhs and the pipeline could be approximately 1,200 to 1,500 crores. We should be looking forward for our first asset to launch in November, December, or mid-November. We'll surely inform you for all that thing. Question from Bhupati Raja. When is your first SM REITs coming to market? I guess it's a repeat question. We're looking forward to launch ASAP. And since it is just the first time, which Sameer has mentioned, we're looking at the entire compliance, proper asset, and we're looking at all the top tier assets, top tier locations, which is like Pune, Mumbai, uh, Delhi, and Bangalore. We have a pipeline again to mention around 1,200 to 2,000 crores, which we look forward to launch at the earliest. Question from Jayan. I've noticed that the valuation of PropShare has gone down since then. Since this is a low risk investment, is it concerning that the price has been gone down? So just answered for this just a couple of minutes back. Please look at it as a long-term investment where you look at it 3 to 5 years, because the market dynamics could be a person who is having to trying to put down a larger volume would have created a kind of a dip, but you should look at a yearly kind of thing where the valuation report is submitted. Question from Mr. Osman. Any property you're exploring in Hyderabad? Is Hyderabad not coming up well?
Usman, we are definitely looking at properties as we speak. In fact, we are evaluating 3 or 4 properties there. We think Hyderabad is coming up well, yes, but there is definitely supply, a lot of supply there. So we have to make sure that we invest in properties where tenant stickiness is there, and we also get the capital appreciation. But to answer your question, yes, we are exploring in Hyderabad too.
Question from Sachin, minimum investment 10 lakhs and ROI matches mutual fund.
So ROI, it depends, as I mentioned, right? We are looking at a IRR. So a rental income of 8%, 8.25%, whereas IRRs of 13 to 15. So if you compare it to debt mutual funds, definitely the IRR is much, much higher. If you compare it to equity mutual funds, for large caps, it's quite comparable. So large caps typically give you anything between 12 to 13%, but obviously the volatility is a lot more. I don't want to compare this to mid caps and small caps because there the volatility is very, very high. And of course, then the returns are also high. But if you compare it to all the debt instruments, some of the hybrid instruments, the ROI definitely matches or exceeds these.
Question from Ankit. There is actually the same question asked earlier
Yeah.
regarding the prop dip. Question from Prashant. Is the rental income as distributed as a cashback? Then why is it related to RBI rate of interest?
So Prashant, the way it works, right? Your rental income is a factor where you also take into account what are interest rates in the country. So can you imagine if RBI rates were say at 18%, then why would anyone invest or buy a property with a rental income of 8%? Because they could easily put money into a deposit at 18%. So definitely there is a correlation. So as RBI rates come down, rental rates also tend to come down, though it takes a bit of time. So it does not follow immediately like fixed deposits. But definitely there is a correlation. The correlation may not be one-to-one. Like in fixed deposits, the correlation can be one-to-one. In rental income, the correlation may not be 1:1 because there are other factors also of demand and supply.
Question from Mr. Jagmohan. Shall you invest in finished properties or semi-finished or raw properties? In case of raw, in what way it would be completed? Well, we only look at finished pre-lease commercial properties, which Samir has mentioned. Question from Mr. Venkat. Quarterly returns are taxable. Well, these are, yes, there are quarterly returns, but they are not taxable. These are tax-free returns, which Samir has mentioned. Question from Nikhil. Is the IPO going to be a lottery basis allotment or first come, first serve?
So it's going to be Nikhil lottery based allotment as in all IPOs. So we will be effectively following the SEBI regulations, which will then be disclosed to all investors. What we plan to do, Nikhil, is once our property is signed up, once the term sheet is signed, once we've filed with SEBI, we're going to be doing webinars probably once in 3-4 days. And we'll be doing a lot more webinars explaining the whole process in detail.
Question. So there's a repeat question in terms of capital repayment.
Yeah.
The question from Suresh. What is the big difference between mainstream REIT and SM REITs? Why should I need to invest in SM REIT instead of mainstream REIT?
So Suresh, a few differences. One difference is we cannot do any, in SM REIT, we cannot do any related party transactions. Whereas in REITs, if you see, most of the REITs are launched by developers. So whether it's Embassy REITs, recently it was the Satwa, or the Mindspace REIT, which is Raheja. So they do a lot of related party transactions. That's one. Secondly, they can do a decent amount, or 20 or 25% in under construction assets. We can do only 5% or less than 5% in under construction assets. Thirdly, most of the investment in REITs is by institutional players. So the institutional players, and these are mainly foreigners, so 90% of their investment in REITs is institutional, whereas in SM REITs, I would say 75 to 80% is actually retail people like you and me who invest in SM REIT. And finally, I would say our returns are slightly higher than them. REITs typically give anything between 6 and 6.5% returns because they also take a lot of leverage on the REIT. We are not initially planning to take any leverage, so our returns are also higher. So instead of 6.5%, we give closer to 8.25%. So given all these, and both are regulated by SEBI. So given these, we think SM REITs are a much better investment than REITs.
Question from Shabir. What is the probability of IPO value reduction once the same is traded in the open market? Historically, we can expect steady appreciation in SM REIT stocks.
You're absolutely right, Shabir. We will be giving valuation reports to the stock exchange over 3-5 years as you hold it. It should be very good and steady appreciation. Uh, my guess is, and obviously there are no guarantees out here because these are markets. My guess is you should expect at least 5%, and this could go to as high as 8% per annum.
Question from Harish. Do you invest in only private limited company or LLP also? Any restriction from SEBI for LLP investment?
No, I don't think there's any restriction, but we will be doing in a private limited company.
Question from K. Mathurpi. What are the risks involved? Not very sure for this, but did Strata close shop recently?
Close shop.
Close shop recently? If yes, please explain risk in context of this.
So Muthu, I don't want to obviously comment on Strata since they have some other issues. Let me talk about the risks involved in SM REIT, right? Firstly, SM REITs is regulated by SEBI. Secondly, the main risk here is tenancy risk, right? If the tenant leaves the premises, and if you are not able to find the tenant, and then the property is empty for some time, so that's a real risk, right? I mean, because it may take you some time to find it, and the property is empty. But that would be the case even if you invested anywhere else. As I mentioned earlier, the SPVs or the private limited companies which own these assets are bankruptcy remote SPVs. So anything happens to the investment manager, nothing will happen to the SPV. So we are very confident that all those risks are not there at all. I would say you should keep the risk as tenancy. The tenant leaves, not able to rent the property on time, and then you obviously lose on the rent. So that's the major risk, really.
Question: if we have to sell the property in between, what is the process? That's been answered. You can just reach out on the BSC or NSE over the counter. It can be traded. Question from Sachin. Minimum investment 10 lakhs and ROI mutual matches mutual fund. This is already answered. Any lock-in period? No, there is no lock-in period. Question by Akshay. Who will manage once HBits exits after 4 to 5 years or earlier or later?
So Akshay, the way it would work is if we decide to exit the property, right? We will sell the SPV to a new buyer and then delist the SPV and pay off all our investors the returns. So if we were to sell it at say 14.5% IRR, those returns will then be passed on to all the investors who invested in the property.
Suggestion: please bring long-term hospital lease for 20 to 30 years. It will give very superior returns on the long run, as after 3 years there would be 15% increase, fetching annual recurring return and global and good capital appreciation.
No, totally agree. We are looking at hospital assets. So if anyone has any good hospital assets, happy to look at that. But yes, to answer your question, we love the hospital business, and we are looking at it very actively.
For an existing investor, when you move to SM REITs from the fractional commercial real estate, can we expect the same entry yield and IRR? If not, why?
Yes, to answer the question, you can expect the same uh, entry yield. The only thing is there won't be any top-ups given. which used to be given earlier, but here there are really no top-ups given. So you could be earlier on we could give 9.5%. In this case, it will be whatever we get from the tenant. So the entry yield may be slightly lower, but overall yield should be reasonably the same. The IRRs, I don't think there'll be too much difference, though in this case, because the taxes are beneficial to you, so the post-tax IRRs are going to be much better.
A question from Osman. So all your future properties will be in the form of SM REITs, or you will also have traditional standalone fraction model that we have today. So it'll be only and only SM REITs as of now. Question from Ajay Mansukhani. What is the probable ROI of REITs in November, December? Won't anything below 9% is infeasible for this, as the ROI on more risk-friendly ones are at 7 to 8-ish?
So when you talk about ROI, right, ROI is really a question of income plus capital appreciation. In this case, we do expect, like I said, 9%. Firstly, getting rental yields today are almost impossible. Uh, I mean, it's more towards 8.5, between 8 and 8.5%, I would say. And when you talk about return on investment, if you look at longer term, we do expect, Ajay, in this asset class, to get returns closer to 13 to 17%. So my suggestion is don't look at only the rental income. Do look at the potential capital appreciation which you can get from Grade A assets.
Question from Prashant. If I buy a property at 100, hold it for 4 years, and with the capital return, the value I'm left with is 60. Now, if the property is sold at 130 and I'm paying the capital gain tax on 70 instead of 30, because my original purchase price is 100. Yes, so I'll just say, because you're actually talking about 100 rupees. Yes, to give you a little answer to this, so I did a basic calculation on 100, taking the same parameter in the current, which is the earlier erstwhile module, with the new SM REITs. Uh, the post-tax money in the fraction or the erstwhile one was coming around 173 rupees 50 paisa. And in the new structure, it was coming as somewhere around 182 rupees post-tax. So it was actually a better tax-free, or I should say a better return, kind of giving you more than around 9 rupees on 100 rupees. So you can make out, if you invest, let's say 10 lakhs or 1 crore, so that is going to be a better returns for you. Question from Pankaj. When you invest 10
Sorry,
rupees,
just to add a bit, effectively your effective tax rate should be, my guess is between 150 basis points or 1.5% to 2% better than the earlier structure.
correct. So Mr. Pankaj Bhayan, I happen to ask, when you invest 10 lakhs at IPO, can you sell REITs for 5 lakhs after 2 years?
So I don't know what you mean by that. Is it the denomination you are talking about, Pankaj? But we do expect SEBI to reduce this 10 lakh investment over time. Over time, the units may probably come down to 1 lakh or even less. And if that is the case, which I think will happen, you could definitely sell smaller units also, like 5 lakhs.
Correct. Question from Karthik. What is the difference between currently listed REITs on the exchange and SMBs? What would be the average expected trading volume on the exchange? Though we've answered the part one, Sameer.
Yeah. On the average expected trading volume, obviously, Karthik, SM REITs is a new asset class. So initially the volumes might be lower, but we do expect the volumes to pick up. Having said that, like I said, the price fluctuation in these is not going to be too much, right? Because commercial property prices don't change on a day-to-day basis. The appreciation really will come over 1 year, 2 years, 3 years. Alternatively, it could, as the market becomes perfect, since you're going to be paid quarterly rental, it should actually be going up every month. month on month, because the rental income actually comes month on month to the asset manager. So it should go up, and then after 3 months, it should actually dip. Like as you get dividend, the prices typically dip. But that obviously happens only in a perfect market. So over time, the market will definitely, Karthik, become perfect. But initially, I do expect trading volumes to be not as large, but definitely volumes will be there.
Question from Sridhar: what kind of insurance for the property against calamities?
So Srila, we take all the insurances which are needed. So all our properties are insured uh, on far for against fire and regular kind of calamities. Wherever insurance allows us to insure, that's all taken care of.
Uh, Question from Ajay: I believe PropShare has one trading, the second one hasn't gone to IPO. Mr. Ajay, both of them are IPO listed as we speak, so you can look at property share on the particular listing. Question from Mr. Bhupati: how the rental income get distributed if one sells his units between the quarter?
So you will not get so whoever's holding the units, there'll be a cutoff period when the rental income goes to the person. It's like when you trade a stock, it becomes X dividend on that day. That's how it's going to work for these units also.
Question from Srinidhi: recently, Strata lost the SEBI license due to disputes. How does HBITS promise to its customers regarding the same? Uh,
So I don't want to obviously comment on Strata, but we definitely follow very high ethical standards. We are a very professional organization, as Abhimanyu pointed out. I'm a chartered accountant, MBA from IIM Ahmedabad. Worked in banking for 34 years before I joined as co-founder. So obviously, integrity is a very large portion of all this, and that's how we promise our customers to continue with.
Question from Deep: how does SM REIT structure mitigate risk for retail investors in case of regulatory changes, major defaults, or under asset underperformance?
Deep, this is because it's regulated by SEBI. A lot of the things we need to pass on to SEBI as compliances. So SEBI has certain rules and regulations which we need to follow. And SEBI, as you know, we think is a very good regulator which is obviously always looking after the investors' interest. So we are very confident that with SEBI being there, a lot of these things will not be a concern for you going forward.
Question again from Deep: how do we address liquidity for retail investors in secondary market, especially during market downturns or rising interest rate cycles?
Uh, so what we are trying to do, Deep, is trying to set aside certain money to for making markets, and we'll also we'll also tie up with some brokers to make sure market making is done. But this is work in progress as we speak. As and when we launch our first IPO, we'll be looking at doing all these things.
So question from Ankit: can the share price also decrease? So
Yeah.
we've answered this question. Question from Sandeep: how is the capital appreciation reflected in the share price? Is there any regulation around it? So as already mentioned, for Mr. Sandeep, at the end of the year, the property will be submitting a valuation report to SEBI, and accordingly that will be put across. Any additions to that, Samir, you want to put?
Uh, how's the capital appreciation reflected in it? Is there a regulation around it? So effectively, it's firstly demand and supply, Sandeep. That's one. Secondly, when we, as Abhimanyu said, we will be sending the valuation report to the stock exchange. So that will also determine the capital appreciation. So I would say it's going to be a combination of the valuation plus demand and supply.
Question from Satish: will what will be the IPO size?
We expect the size to be minimum around 250 crores and maximum to 500 crores.
Question from Srinidhi: Is it mandatory to migrate from fractional ownership to SM REITs?
Uh, as a business, Srinidhi, we want to definitely do that, as I said. So we will not be doing fractional ownership in the unregulated market going forward. We would like to do only in the regulated market. I don't know whether it's mandatory or not, but we definitely are going to be in the SM REIT space.
Question from Gaurav. Can I own the unit forever or I'll be forced to sell after some years? Is it same as traditional way where you buy a commercial property and earn rent regularly?
So yes, you can own this unit forever. It is really perpetual capital. So if the investment manager does not want to sell or decides not to sell this, you will be the owner perpetually and you can keep that. If we sell after 4 or 5 years and we delist the property, then at that point in time you will have to sell your
Question from Madina. Sir, if I
units.
invested 15 lakhs, what will be the price of that property after 3 to 5 years?
Firstly, Medina, it's going to be 10 lakhs and then multiples of 10 lakhs. So you'll either have to invest 10 or 20 lakhs. And then the property after 3 or 5 years is going to basically depend on the capital appreciation you will get. The rental income, of course, you will be getting on a quarterly basis, which will be going into your bank account. As I mentioned earlier, we should expect we should expect capital appreciation of 5 to 7% per annum, though there are no guarantees for
Question from Kishore. For resident
it.
investors, rental income received from small, that is SM REITs, is taxable as income from other sources at your individual income tax slab rates. As mentioned by Samir, this was basically, if it is from income from other sources, it was basically the erstwhile part where the income was from CCDs, earning interest income. But in the new format, which we are talking about, is going to be return of capital. Well, when the prospectus come for the investment at the time of the IPO, we will have a tax note, which currently will be done by ENY, which is our taxation partner, and that will be published along with that, which will clearly show that how this will be shown as a tax-free return. So it will not be just without any statements. It is going to be there mentioned in the prospectus form as well. Question from Rama Krishna. Is the property so if the property is sold for 125, which was 100 when purchased, what is the capital gains, assuming the property is sold after 5 years? I heard differently of the capital gains of the increase 25, and other time I heard it is on 65. Uh, so I guess we need once more a clear, for a lot of people, just in the
Sure.
benefit of everyone.
Also, sure. You invested Rama 100 rupees. You got 8 rupees rental income for 5 years. So you have received 40 rupees after 5 years. So your capital then goes down from 100 to 60. If you sell it after 5 years at 125, the difference between 60 and 125, which is 65, will be your capital gain, on which you will pay 12.5% as capital gain. I hope that is clarified.
Question. Uh, Rental income is taxable? No, it is not taxable. Same thing. Why starter serves? This is same question. Will ask, what will the IPO price band SM REIT?
Yeah, so we haven't decided the band yet. As we come closer to launching the IPO, we will let everyone know the price band also.
Similar question. Again, question. A question from Ashish. Please clarify what is a
Yeah.
tax-free and what is a taxable, as I do not understand it.
So
Uh,
this is again, I've just explained, Ashish, but happy to do it offline. Also, if you can call up Abhimanyu, he'll
Great.
be able to go through the detailed calculation.
For everyone's benefit, just so you can have the spelling of my name, and my contact details are available on LinkedIn. More than that, you can surely reach out to your investment managers, because all the details which you mentioned, you have a particular person who will be taking care of your investment. So please reach out to all your investment managers for any particular query as such. Question from Yash: how is the capital appreciation calculated if I sell my share? So again, a similar kind of a question. Uh, Question from Mr. Tripuri Ravindra Kumar. So can we get full details like how we can apply IPO and from there how we get quarterly rent and how to sell in market and finally sell the property sector in PDF format via WhatsApp? I guess we will surely creating a kind of a structure, moment, and the prospectus of this will be available at the time of listing the particular product. And since we are, and you are aware that we're doing a webinar every 2 weeks right now, or I should say every 10 days now, as the IPO gets closer, we'll not only be doing a lot of more education webinars, but we'll be surely creating a lot of PDF formats for your viewing and understanding. Question from Dharmesh: do you buy floors in a commercial building? How do you ensure that other buyers don't compete during your investment period?
So Dharmesh, we buy full buildings also. We'll be buying, or we may buy floors also. How do we ensure that other buyers don't compete? We have very good relationships with developers and IPCs who actually show us extremely good transactions. So I think having good relationships with developers, having good relationships with IPCs makes a very, very big difference. And of course, having a good brand also helps. So I think it's a combination of all these things.
Just to add in a point, as the competition which Sami mentioned, the two key points and one of the USPs at HBITS has been the entry price point, which clearly shows in the kind of performance which has been done. We did one exit of the property wherein the targeted IRR in the brochure was mentioned at 15.54 and we delivered 17.54. The second one, which we exited, the targeted IRR was showing 13.1 and we delivered around 14.7. So it clearly shows that we are looking at a particular entry price point to be good. And how it as well comes is that, as I mentioned at the earlier part of the slide, Mr. Shiv Parekh, who is the founder and CEO, he comes from a family of real estate where they've been into 30 years of real estate, which helps to reach out, which Samir clearly mentioned, to all the IPCs and connects in the market. Question from Nikhil, it's the same question. Are the property insured? Question from Dharmesh: do you buy hotel, hospital assets, or small nursing homes? Look forward to.
Uh,
Yeah, please.
yeah, yeah, we would look to buy, but not very small, because our sizes would be, I would guess, 250 crores and above, and over time, more closer to 400 to 500 crores. But could we look at all these assets? Absolutely.
Question: if I look at current titanium or platinum, why is there lot not more than? And I've already answered that. Question from Jagmohan: in what way the associates will be involved in procuring and pay commission? Whether SEBI permits your associates or only SEBI registered brokers for AMFI registrars will be involved in procuring business? Since we are at the early stage of this, and of course we will be coming out to reaching our strategic partners, what will be there, we will surely be letting know in advance what the structure would be. And more than that, I'll request you to reach out to your investment managers, which will clearly take you through the entire process. Mr. Pradeep Kumar, how do you invest in your company?
So I guess we are a company are obviously funded by some very good angel investors, and we recently raised our Series A. Happy to, if someone is keen, happy to have a conversation. You could write to me directly at samir@hbits.co.
Question from Manish: all deals is operating through 1 square feet basis model. How do you explain this?
I guess there the model is very different. They are firstly not going to be regulated by SM REITs. They are, I think, operating in the alternative space. They also look at land, which is does not yield any rent, or maybe residential also, where the rental yields are very low. So there their operations are very, very different from ours, and our scale, Manish, is much larger than theirs.
Question, not a question, but please diversify from office to hospital warehousing. Yes, already answered that.
Absolutely,
Absolutely.
absolutely.
Question from Ankit, how the rental income is tax-free, have answered that, but we will surely putting this particular webinar, recorded webinar on our on our YouTube channel. Along with that, every single person over here will be receiving a link to the webinar, the recorded webinar, wherein the explanation of such question is already answered earlier. Question from Yash, approximately when should we expect the IPO so as to arrange the future funds accordingly? So the answer is already there. That we'll be looking forward to get come in mid-November to maximum December. Question from Swetha, can I bid for the IPO through a platform like ICICI Direct?
Yes, you can. Shweta, to answer your question, you can go through any brokers you have, yes, and you can bid through those platforms.
Final question from Ankit. Thank you. The IPO size and property cost same.
It would be roughly the same, Ankit. The smaller differences would be, the costs of doing the IPO, appointing the merchant banker, and some of the other costs, plus the registration cost of the property, which will also have to be added. But other than that, overall should be roughly the same. There will be some differences of these costs.
Well, I like to say one particular statement to everyone. Please follow us on LinkedIn. Please regularly visit our website. There are a lot of updates given there. We are very soon going to be adding a lot of calculators for your, retirement planning, XYZ, how it will help you to look at future objectives. In addition to this, Samir, if you could just talk a little about, since I've already taken much, and you're in US, and it's like 4:30 a.m. over there, just a little bit about the AI front, what we are doing.
So on the AI front, obviously we're doing three, four things. One, we are using AI to identify properties which are undervalued or which are under rented, where we think the micro markets are good, so that the projection or the appreciation in the property uh, happens. And we are using a lot of AI for that. So that's one. Secondly, we are also using AI uh, to email back queries. So people who have queries, AI will actually respond on email. Obviously, it will be checked by one of us before it responds to make sure that it's accurate. So that's happening. And we are also going to use AI agents for people who call on our website to answer questions, basically making it a very seamless journey for all our investors. So we are investing a lot in a lot of these things, and we hope that we can continuously improve over time and make your journey and investment very, very successful.
In addition to this, thank you, Samir, first of all. In addition, I'd like to as well update, we started a WhatsApp channel of HBits, in which was such a great that in just in 15 days, we were able to add around plus of 1100 people. If you're not part of the WhatsApp channel of HBits, which gives you regular updates, you can reach out to the investment manager and you can take the particular link from them. Again, thank you everyone for joining us this afternoon.
I think there are, Abhimanyu, there are a few more
No,
questions which have just come, so we
just
should
come.
quickly
Okay.
answer that. So
Okay.
is DMAT the only way to invest? That is correct. That's the only way.
Question is, due to SM REITs, how does HBits as a business makes revenue profit?
I guess we can discuss this offline. And like I said, I'm happy to talk about it.
Question from Ruchi. Please let me know when existing assets going to be listed. Of course, Ruchi ma'am. Sure,
Yeah.
of course. Again, thank you
But
to everyone. So that's the question which we had. Thank you, Samir, for taking this time. And now you can just, go and take rest. And
no, thank you. Thank you, everyone. Thank you, everyone, for attending this webinar. We hope to use these webinars to disseminate a lot more knowledge to you guys. And as soon as we are coming up with the IPO, we'll definitely be doing a lot more, explaining a lot more, so that we can make sure that you guys invest in the IPO. Thank you so much.
The question, last one, would today's webinar recording be available? Yes, today's webinar recording will be available. And our next webinar is on the 11th, wherein I have invited the acquisition department to let us know how the markets are favoring, what locations tier 1 and tier 2 are talk about. So please be a part of that particular thing as well. Thank you very much again, everyone. Thank you, Samir.
Thank you.
Thank you.
Thank
Bye-bye.
you, everybody. Thank you. Bye.